IFRS 15 determines two types of contract cost. The first one is related to the incremental cost of obtaining a contract, and the second type of cost is the cost of fulfilling a contract. Let's start by explaining the first type of contract cost. Incremental cost of obtaining a contract. There are two conditions that must be met in order to consider any cost as incremental cost of obtaining a contract. The first condition that this cost wouldn't have been incurred had the contract not been obtained. So let's take an example. Assume that you are paying sales commission, and once the contract obtained, so you are going to pay sales commission. So this sales commission is directly related to this contract. Once you obtain a contract, you have to pay sales commission. So if you didn't obtain this contract, you will not pay sales commission. This is the meaning of the cost that wouldn't have been incurred had the contract not been obtained. The second condition that must be met as well, that the entity must expect that this cost can be recovered by the contract revenue. So the contract revenue must cover the cost of fulfilling the contract and the incremental cost as well. Otherwise, there will be impairment, and you don't need to capitalize this incremental cost in this case. The second type of contract cost that's covered by IFRS 15 is related to the cost to fulfill a contract. And in order to consider the cost under this category, you have to go through a series of questions that we are going to follow one by one. The first question that you need to ask is, are the costs incurred within the scope of another standard? Because if this cost is related to another standard other than IFRS 15, so you need to consider this cost for that standard or under that standard that's relevant to this cost. So if the answer is yes, account for this cost under the other relevant standards. But if the answer is no, go to the second question, which is, do the costs related directly to a contract or anticipated contract, and it can be specifically identified? So if this cost is related to a specific contract, so it will be one of the costs related to a contract cost under IFRS 15, and this can be used to fulfill a contract. If the answer is no, so you have to expense this cost because it's not related to any contract specifically. But if the answer is yes to this question, so go to the third question. Do the cost generate or enhance resources that will be used to satisfy a performance obligations? So you are using this cost to fulfill a contract and to develop your performance obligations under this contract. If the answer is no, it doesn't help the company or it doesn't enhance the performance obligations under this contract. So in this case, it must be expensed. But if the answer is yes, these costs are related to enhancing the performance obligation or helping the company to fulfill a contract. So go to the last question. Are the costs expected to be recovered? Again, this is the same condition of the exactly like the condition that we have just explained in the incremental cost, that you cannot capitalize any cost you are not expecting to recover from the contract revenue and the contract benefits. So if you are not expecting to recover this cost from the contract revenue, immediately you have to expense this cost in the P&L in the same period. But if the answer is yes, we are expecting to recover this cost from the contract revenue, in this case you have to capitalize this cost because it will be cost of fulfilling a contract. And once you capitalize this cost, you have to test for impairment exactly like the incremental cost. So again, IFRS 15 determines two types of cost: incremental cost of obtaining a contract and a cost that can be used to fulfill a contract. In both types of cost, you have to test for impairment because two types of cost must be capitalized and tested for impairment up to the end of the contract.